Chapter 3, Double Entry Bookkeeping and Books of Prime Entry. So what is double entry bookkeeping? Probably the most significant concept that you need to understand in your accounting education. This will go with you till the end. Up till now, we have been recording transactions in the accounting equation format. Well, that might be sufficient to start to understand the accounting, but that is not sufficient to actually practice accounting. Usually that format is not sufficient to cater to the volume of transactions that happen in most type of businesses on a daily basis. To record all those transactions and more, we need a different kind of system, a very effective and efficient system. So as a result, accounting systems are designed to show the increases and decreases in each accounting equation element. And you remember what are the accounting equation elements? They are assets, liabilities, and capital. And there are sub-elements as well, which we will get to know more when we do more examples. So when we record a transaction, that is a particular record. So where do we record it? We record it on a thing called account or a ledger account. And in its simplest form, an account or a ledger account has three things. It has a title, that is the name of the accounting equation element. For example, if it's an asset account, it can be a vehicle account, it could be an accounts payable account, could be account receivable account, so on and so forth. And a space, obviously within that account, to record the increases in that element. For example, if you have a cash account, so if you are receiving cash, so the cash is increasing, you need a space to record that increase in cash. And similarly, if the cash is being decreased, you are paying, then you need a space to record the decreases in that account. In our example, cash account. So that account is called a T account, simply because it resembles letter T. And the left side is called the debit side, and the right side is called the credit side. Let's have a look. So this is a T account, or an account, or a ledger account. You can call it anything. On top, it has a title. For example, cash. So whatever happens with cash, we record in this account. So left side is debit and right side is credit. And there are rules as to what goes on left side and what goes on the right side. And these are the rules which we will learn by practice. But there are certain axioms which I will explain to you, which will make it easier for you to always remember when you see a transaction as to what will be debited and what will be credited. For example, for asset, if there is an increase, it will always be debited. Increase in asset, always debit. And likewise, decrease in asset, always credit. We will be learning these rules in a very systematic way in our next lessons. The other aspects that we need to understand is the double effect. That's why it is called double entry bookkeeping. So in every business transaction, there are two effects. So if you receive something, you also have to give something, right? For example, when Sunshine Cafe sold coffee, it gave coffee but gained cash. So two effects. One thing is going, one thing is coming. And that will always be the case in accounting. When you record a transaction, there are two effects in two accounts. Likewise, when it bought the coffee, it gained coffee machine, but it accepted a liability to pay modern supplies in future. Remember? Accounts payable. And simply the double entry bookkeeping name came out from this double effect concept. And it says that every financial transaction will result in two accounting entries or records, one debit and other credit. And the total value of debit and credit will always be equal. The balance. Recall the concept of accounting equation. The two sides of the accounting equation will always balance, will always be equal. And that is how the double entry bookkeeping affects the accounting equation, two sides of one transaction. In the next lessons, we will go through the rules for debit and credit. I really love the idea how this concept has been defined in Frankfurt's Business Accounting, and I'll be taking a lot from it to explain this to you. If you like, you can grab a copy of Frankfurt's Business Accounting. Excellent book. See you in the next lesson when we will go through the rules for debit and credit.